Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How you doing today? Hope all is good with you. It's been a while, huh? Yeah, this is our new kind of a work in progress, still new set as we get everything set up for you because we moved, right? So we had to tear it all down, put it back together. Then the holidays came. It was a mess. Anyways, this is the Fin Tips segment. We try to teach you something new, share something new and interesting with you so that you can help keep your dough straight. Today, I am not picking on old Dr. Fauci. I will tell you that much. I'm going to turn it up just a little bit for you because it seems like it's a little quiet. But I'm not going to pick on Dr. Fauci. I just want to take a look at his investments. We actually have all of his accounts, not here under our management, but we have all of his accounts, and I actually want to go through some things, and I'll share a tip with you because what you see may look interesting on the surface, but we'll dive a little bit deeper. And again, I just thought it was interesting because he's been in the news a lot lately. You know who he is. And, well, we got his investments here, so let's take a look. All right, so first thing, this is all public to some degree. You know, there was that argument between him and the senator the other day, and so everybody was looking it up, and I thought I'd look it up too. So I'm going to skip through some of this stuff where he got paid or reimbursed to go to different events and things like that, and I'm going to go down to his Charles Schwab account. Here's one of them. So we've got an IRA at Charles Schwab to show that it's definitely him. There you go. There's his name. And they've taken out his account number, of course. No need to share that one there. And if you have an account at Charles Schwab, yeah, this is pretty typical. Now, it's a year old. This goes back to 2020. So he's actually a year older now. He's, I believe, 81, almost 82. And so you want to keep that in mind when you're taking a look at this. This is the managers, I guess, that are managing his account. And I want to point out something really interesting about that in a second. But let's take a look. So he's got a handful of accounts. I'll start with this IRA. Looks like he did... there we go. So the IRA had a starting value of 614. Year to date was 589. So he had a little bit of a gain in his IRA there. He's got some credits, contributions, things like that. Ending value comes out to 638,519 for his traditional IRA. Now, if we look inside of his accounts, this is what's fascinating to me. Here's your transaction summary. We've got debits. Okay. Investments sold. All right, did a little changing of his investments. Dividends paid. All right, sweet, nice. You'll see why in a minute. Withdrawals, no withdrawals, although he could. And we got investments purchased from some of the money there. No problem there. And no fees charged or anything, right? So total cash transactions, what you got going on there, right? All investments. Now, what's interesting is his investment mix. So we can actually see his position. So he's got... some in the investment grade PIMCO fund. He's got Vanguard intermediate term. That's a dividend paying type fund. He's got some funds that are wrapped under the company that he's using for his management of his accounts. And notice how those are bigger, right? Because there's a higher expense ratio. So that advisor's like, I'm no dummy. Let's put 34% in there so I make a little bit more money. Ticker symbols are below. You've got some in some growth funds here, mid-cap funds, and a little bit international. He's got a little bit in cash as well. So that's his IRA. Now, before I go on to showing you this here, let's take a step further. He's got other accounts here. He also has a defined benefit plan. That's where the bulk of his money is going because he makes a little bit more money than the average bear. So he's got about $2,500,000 in there. Looks like he grew a little bit as well throughout the year. He's got 79% in different equity funds, 20% in bond funds, as you can see. And the positions down here are listed. It's some of these similar funds. I believe this third to last one is a little bit different there, the high dividend fund. But you can see how he's broken down. That's really not that interesting. Let's go a little bit further because he has other accounts there as well. He's got, ta-da, this is his other, which one was this one? This is revocable trust. So this is where the bulk of his dollars are, rightfully so. He's got about $5 million. Actually, he finished out the year last year with $5.2 million in the revocable trust. I don't know if you think that's a lot or a little or somehow he's a good saver or not, but I'm just pointing it out. And then when we look inside of there, I'll go quickly. Here's the different investments that he has. Again, you have some of the similar investments in regards to the manager that's managing his account at that company. They're using their funds. So I don't know, a slight conflict of interest given the percentages that are there, but it's allowed. So nothing to be too crazy about. And you could tell he's thinking more long-term here because he's got more growth funds. He's got more stock funds. This revocable trust is likely going off to well, I wouldn't be able to see the beneficiaries, but it's likely going off to someone who inherits this account so they can afford to take a little bit more risk. And maybe lastly, We've got the spouse, Fauci wifey. So she's got the revocable trust here as well, and she's cooking with about 1.9 million in that account. And what do you want to do? One more? She's got an IRA, I believe. Yeah, she's got the smaller IRA. This is the spouse here with $111,000. All right, so then there's a whole breakdown. You can look through all of his investments. I thought this was kind of interesting. You look at his IRA. We'll go down here. There we go. Oh, no, one more. So we're going to look at his IRA. What I did is I said, we've got this investment here. We've got this one. I know the percentages there. Let's see how his portfolio has done, right? Let's take a look. Is it doing really well? Did he know something that we didn't know? So we're going to dive in here and take a look. So in purple, we've got the portfolio, Dr. Fauci's portfolio, assuming that it didn't change throughout the year, which we know it did change a little bit more towards conservative. But let's take a look. So I'll go percent return. Over the last 10 years, we actually can't go back quite that far. We're going back to 2014 for this because of some of the funds that were at that CBIC. And so his total growth, 118%. Had he stuck with that, the stock market return 175. We look over the last 1 year, he gained about 10%, sort of flattened out there as bonds flattened out. And the stock market over the last 1 year period, S&P, around 24%. Now, I'm sorry. I'm still new at this new thing. So you look at that, and here's the problem. Here's the tip. The kids are going to look at that and go, wow, Dr. Fauci didn't beat the market, right? That guy sucks. That's horrible. No, that's perfect. He actually has a very, very well, for his IRA, he has a very, very well-designed IRA. His trust is actually where more risk is being taken. See, he's not supposed to beat the market. There's nothing wrong with whoever is managing this account, except for the fees. They charge him a lot for these, by the way, in a separate transaction. So he's supposed to be taking less risk, right? He's not supposed to grow as much as the market. I think a lot of the kids look at things like this and they go, he didn't beat the market, therefore he should have just bought the S&P. No, he shouldn't have. He's 81 years old. He's not supposed to be taking that level of risk, and he maybe not even wants to take that level of risk. In that respect, maybe he knows something we don't. Maybe he's been playing it safer because of the virus. I don't know. You guys can speculate in the comments all you want. So the point being, I only have one argument with this portfolio, but the point being is he's where he should be for his age and with other assets that he has taking more risk, right? Here's my argument with the portfolio, though. He's taking the same level of risk as the market. He doesn't need to. We'll go out 5 years. I don't know. Let's just pick something here. So what I'm showing now is the volatility of his account relative to the stock market. It's quite easy to tell he's almost falling as much as the market when the market pulls back off of any high. So 0 is anytime the stock market makes a high. And then as the market falls, he's kind of falling at the same pace. It's actually getting worse. If you look over the last year, well, and that's to be understood with bonds being more volatile, but he's actually being as volatile as the stock market, but it's not too fair because he's gaining less than the market, right? That's the consideration. That's where you focus. You go, if I have a portfolio that is as wild as the market, I should see performance as the market performs, or maybe better, right? If I have a portfolio that is much less wild than the stock market, how could you expect returns in the same respect? You're being safer, right? So I just wanted to point that out. I don't know if that was interesting to you. I just thought it'd be a fun way to kickstart this show again. I appreciate you guys watching. Let me know in the comments below. If you were Dr. Fauci, would you take more risk here? I don't think many people are going to say yes. And like I said, maybe he knows that the virus is going to get worse, or he's a doctor, right? He's got to know what's going on. So I don't know. But I just wanted to share with you his portfolio. Hope you enjoyed it. Join us. Well, we won't be. We do the closing beat every day at 5 o'clock when the stock market is open. Enjoy the rest of your day, and thanks for watching. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.